Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just got a couple of minutes past midday, and we are realigned on the front of daylight savings, which is doing me a massive favour on these shows because I keep saying good morning when I should be saying good afternoon. I keep saying good afternoon when I keep meaning to say good morning. Craigie boy, hello from a sunny Brighton, not too far away from you here, mate. And the sun is certainly shining, but the wind is out as well. So I bet it's whipping around Brighton, especially around the pier. Anthony, hello, mate. Erica, Gert, and everybody else that's with us. Normally takes a few minutes for people to start coming in, so we will just allow a little bit of breathing space while they're starting to come through. Let's take a very quick look at what is shaping up to be some potentially high impact news today. Let me zoom in on this for you guys. So what we had here yesterday is we had ISM manufacturing PMI that came in slightly under, as well as job openings. We're going to take a look in a little while how that affected the markets yesterday, but it's not painting a great picture for the US economy. It's not too bad, though. In truth, the numbers are very, very close. I don't think these are going to be the catalysts for the market at the moment, but it's all playing into a larger risk on, risk off picture. Obviously, today is April the 2nd, a hugely important day because of this. President Trump is speaking today. We need to know exactly when that is. And the markets are listening. I can tell you that. Certain elements of this are going to have been attempted to be priced in by money markets at the moment, but all markets, money markets is a bit of a nonsense term, but it's very, very difficult because we don't know exactly what is going to come out of this in terms of tariffs. So expect volatility today. Do be very careful if you're trading out there as well. And obviously before that, 12:15, this is UTC time. Need to get our heads around the fact here in London, we're now UTC +1. So that's 13:15, just before the pre-market open in the US. This is ADP non-farm employment change, right? So this is where they're looking for a positive print to kind of pick up on yesterday. So obviously non-farm industry, they're looking for employment change to be positive, to show there's more people getting into work, there's slightly higher GDP, kind of brush over the poor PCE print last week. But ultimately, the markets are on a knife edge at the moment, waiting for this announcement from Trump. So today, I think, is going to be really, really key for the markets. Obviously, these things aren't going to play out straight away. And we need to remember there's a lagging effect with these, that the announcement will be made, X amount of this will be priced in. Then the people that are on the wrong side of this initial market reaction will then look to get on side with that. However, we need to remember the tariffs and the fallout from that from an economic perspective are going to take quite a while, okay? The next thing we need to be prepared for is stepping into Q2 is looking for the US to start refinancing some of their debt. And for that, they want the bond markets lower. They want a weaker dollar. At the moment, they're getting both. So, however he's kind of going about it, I'm not a massive fan of Trump as a human being or as a business person, really. But what he is trying to do in his own way is try and get these markets down to benefit the United States at the end of the day, right? Not doing it in the best of ways, in fact, but that's just my opinion. Ultimately, if his goal is to drive this down, then that's what he's starting to do. So let's take a look at that. Daniel, hello, mate. Very kind of you. Great to have you here. And I hate it here as well. It always makes me chuckle. 14 watching, retailers left. Maybe on YouTube, mate. We've got about 900 at the moment streaming this through Twitter, which is our kind of main viewing platform. But yeah, unfortunately, YouTube watching numbers down really, really low these days. But yes, Jack, yes, as the Polish say, it is what it is. But on average, we get about 4,000 to 5,000 people on these shows, which, is a real blessing. You guys come and listen to me rattle on about my experience with the markets and kind of how I see things, but do appreciate every single one of you. So before I go off on a tangent, do remember this is our Alt Request Wednesday, right? So I wouldn't personally be looking to open any positions today. With the Trump news coming out, you might get some, afternoon volatility after ADP, but are very, very unlikely, right, in my opinion, because, non-farm employment change could move the dial a little bit, but people are going to be waiting on tenterhooks for Trump to speak, all right? So let's dive into the charts. We're starting here on the 4 hour with Bitcoin. If you've got any tickers, if you've got any instruments you would like me to take a look at, just pop them in the chat and I'll take a look. Obviously, we will take a look at ETH as well, which has probably been a real kind of underperformer in this cycle. We'll take a look at Solana, which was the one that really led the early stage of the bull cycle, obviously then going down into the meme narrative, etc. But with Bitcoin, where we sit here, is actually really clean for me, right? So on a 4 hour scale, we discussed this on Monday. This was the gap that was capping the market for me, all right? So we're going to look at the higher time frames as well, so we're kind of backwards rationalizing this as we go. So we took liquidity from the lows. We've still got this low down here, which is equal lows, which again, when we look at on the higher time frame, is one of those things that makes me think we come back for that potentially at some point. The plan was quite simple, really. Close above this gap, which at the time was a bearish gap. So this was red. So this was a bearish gap. This candle closed above. In doing so, we took liquidity from the local high and created this nice bullish fair value gap here, right? Also closing above this down close candle, confirming this as an order block. So areas that we look for continuation. If we don't get continuation, we violate these areas, we look for price to move lower. So always going to the charts as an intraday trader, my job really is to kind of jump on board the short-term trend and look to kind of get on side with that. So always looking for, okay, if this plan is correct, this is how it should play out. Where's my invalidation? Invalidation was a close below here. We obviously got that strong move lower, inducing people to go short because they see this as resistance. Ultimately, those people then get taken out, and then we've had this pump. However, we were only looking from an intraday basis in towards this high here. It's rebalancing this gap, so it's a gap high, which makes it an important liquidity pool. And beyond that as well, this purple box is a daily gap inversion, which we're going to take a look at as well. So Anthony, when I'm talking about volatility, what we're looking at, so for example, on an intraday basis, I focus on trading the London-New York crossover. It's when the highest volume is done, trading the FX markets, as well as equities opening in the US, which then injects a lot of volatility because it's the most traded market, the most amount of volume goes through those markets, trillions and trillions of dollars on a daily basis. So I try and align the crypto markets with that because, especially as an intraday trader, I'm trying to jump on board institutional moves, meaning that I want to know when the major players are getting involved in the market, either from a point of continuation or reversal. And then I'm just looking to take a little nibble. Yeah, I just take, smaller trades, not huge risk, not huge reward to risk, but a fairly high win rate system with a relative kind of medium level for break even. And that's how I kind of like to look at the market. So when I'm talking about volatility being injected, I'm talking about news drivers, right? So basically the market will be sat there waiting for these news prints. So let's say, for example, the news coming through is expected to be, quite dovish for the US, meaning kind of bullish, right? So for example, you get a good print coming through with retail and everything yesterday, shows you the economy is relatively healthy, shows you people are spending money, shows you manufacturing is good and stable, then that normally puts strength into the dollar. So you can use that information, knowing that the major funds, the major commercial entities, etc., will be positioned there, banks, et al., ready to deploy a lot of capital in that direction. So if that was the case, I would look at that and say, if we're considering a very strong dollar today and you see that dollar spike move and the money starting to flow into that direction to get behind the dollar on the bid, then you can look at the counterparty FX pairs, for example, right? So like Euro USD, and you can say, okay, you would be short Euro USD, right? So you're short Euro against the dollar because the dollar is stronger. Now, there's a lot of other ways to play that. And one of the key things I do with news drivers is you're waiting for these to inject that volatility around, because they do almost always fall around the New York pre-market or the New York open area. You're then looking for how those funds and how those people, how those major entities are positioning, and you're looking for that volatility to get on the right side of the curve, and then for that volatility to drive you, higher or lower, depending whether you're, long or short that market. So with this, when we got the close above, this becomes a gap inversion, right? So the important thing we're looking at here is this is an area that was resistance all the way through here. Yeah, really, really clear whenever we come into it before. Resistance, resistance. That's when we get the close above. So we look for this area now to act as support. And what you can see here is the stacking support, right? So we've got this in the form of, let me draw this in for you so you can see it all. So we've got this in the form of the order block, right? So we do close above this gap, inverting it. This now becomes support. The close of this candle confirms this gap. So we look for this gap, this order block, and this area to offer support. Close below these. Yeah, so if we've got a candle close down there, it tells me that these lows are then the most probable targets for price to seek out liquidity, right? Old highs, old lows, and we look at gaps and their interact and how price interacts in these areas. Okay, so that's where we are at the moment on the 4 hour. It's very, very kind of simple for me. I'm flat today, which is quite handy really, because we're moving into obviously a lot of potentially turbulent news. The time to be long for me was down here. Happy with that. Myself, the team as well, have been getting off some great calls of secured profit here. And from my perspective, the reason for that exists here on the daily. So on the daily, we could see clearly when we had this initial run up here, and look how price had to really work hard for this. It was a real grind. We didn't see any of those big expansive moves, leaving those gaps. Yeah, we did see it here when we finally popped up here, leaving this bullish gap. It's purple because we inverted it here. So the reverse of what we were just talking about on the 4 hour. Yeah, then price closed below that here. So the reason that I'm not looking to open longs in here is because we're within this gap. Now, we have kind of rebalanced this here, in fact, to the inversion, but we failed to close above it. Should we close above it, it would invalidate it as a gap inversion for me. And then I would be looking higher. I'm not as concerned about this box offering resistance anymore because price has spent ample time in here and also rebalanced it. So this higher then becomes the target. So the ideal daily plan is this. As long as we continue to reject from here, we're rejecting from a bearish gap here. So we can start to see the same way as when we were looking on the 4 hour, we could see the stacked support. Here on the daily, we can see the stacked resistance. Yeah, price come up into this area, bearish gap, inversion gap, all of this, as well as these up close candles here to the 50%, which is around about here, are offering resistance. All right. So we want to make sure, and time, ultimately price is fractal. So it depends what time frame you're trading on, but for me as a low time frame trader, what I'm saying here is I'm more open to shorting this area than I am to longing it. I then want to factor in the news. So for me, today is like really very much like a no trade day because of what's going on in terms of Trump's announcement. And depending on what time that lands, we would expect a little bit of low volume and volatility today as well, because I think most will be sidelined. But, look, we've displaced to the downside here. We're now coming up and finding resistance. The high probability trades from here are still to the downside for me on an intraday basis. I want to see a close above this gap, telling me that price is then looking to achieve fair value up here. We then want to see how price reacts up here. If we wick above and close below, chances are we look for a correction to have another go. Ultimately, we're just looking for price to expand higher, and then we're looking for it to respect the gaps, respect the order blocks, and push on. Today is going to be very tricky with the news drivers that we've got though, right? So that's why I'm very cautious overall. So this is a very key area for me here on Bitcoin. This resistance, when this was closed above, we gapped above here as well. Several weeks back, we were looking for price to drive into this to see how we reacted. We got that massive wick to the upside, expecting and hoping that we would get a little bit of continuation, but also being very aware that we closed below these up close candles. So again, setting a bearish order block here, meaning we have to expect this area as resistance. So what do? Well, when you see a huge wick to the downside like that, it's actually very bullish because you can see, a lot of absorption coming in, buyers coming in here. If you think about it, that was what price tried to do, and that's what it achieved. Yeah, the body tells you what price tried to do. The wick tells you where it was knocked back, basically. So price tried to get this low and then was bought all the way back up to here. Unfortunately, it couldn't hold. We got this huge downside candle then. So watching the reaction of the low, we stepped back inside this range from this low. So like I was just explaining on the daily, the same on the 4 hour, when price reacts with these levels, like it did with this high, for example, look how it reacted at the higher. Came up, wicked below, it tells you that it's just not really getting acceptance at that level, okay? If we look at the opposite over here, for example, you take any of these highs here, but let's just take this one, for example, you can see an initial wick rejection telling you that price could move lower. But then when you see that large expansion and what I would call a strong body close above it, you're then saying, okay, price is looking to move higher. The trading volume is in the bodies, right? So at the moment on the weekly, still very flat. I think we've got a very, very good plan on the daily, so I'm focused in on that at the moment. And like I say, close above the gap here, the inversion gap, then I'm targeting this higher. Whilst we hold this area here, news dependent, of course, I think there's every chance that we're moving lower, especially towards these equal lows, this low here and this low here, which offer very, very key liquidity pools, all right? So let's take a look. We've got a few requests. We can take a look at ETH, we're going to take a look at Solana. Let's take a look at Beam, take a look at NEAR, SEI. I'll do all of them for you, GG. How about that? And then SUI, and then Render for Seb. Cool. Okay, well, let's crack on with that then. Let's go straight to ETH. Oh, ETH BTC as well, yeah. So, and I'm going to do Solana BTC. In fact, just before we go to ETH, we're going to start with those just to give you context off the back of what we were just talking about, right? So, what we were talking about with Bitcoin. So, looking here at, here we go, ETH BTC. This is just getting pummeled, right? So just huge downtrend here. What would I really need to see to think that we're going to get any kind of resurgence? Well, one of the things I focus on when I look for structural shifts is I'm looking for a low to be taken, even on a chart like this. So local low taken here, we really haven't had the best reaction at that, I have to say. So, you do want to see that, and then that offer continuation. When you then drop down a little bit lower, you want to see price above this low, first of all. Yeah, it's retesting this and finding it as resistance. So first sign is getting above here, but in truth, we really need to start seeing price, get above this high here. This high is key for me because this is the high that led to the sweep of the low, right? So if people are caught offside here, if we were looking at this as a technical chart to trade, you would want to see price of people caught offside here, right? And then that's your confirmation here that we could be looking to push higher. So still quite a way to go for the recovery here, unfortunately. But something I've been looking at a lot closer, thanks to my good friend Ionic XBT, is Solana BTC, right? And actually, this has been a lot more helpful to catch. Like this move up here, we caught a little bit of the alt resurgence through that, all right? So, where we didn't really with ETH, it was just still kind of trending down. So this looks a little bit better here. To me, it looks like this is at least trying to put in some bottom here, right? Now, not saying that this is going to hold, but it does give us an area to say, okay, if we start closing below that and potentially retesting it to move lower, we can see that it's going to be a really, really hard time for altcoins, right? With this one, it's very similar, okay? So we've taken out liquidity below, let's have a look, this low here, which was a group of equal lows, actually. So as we look for the high that led to the low to be taken, this is a key level here. On Solana BTC as well. So really want to see this dominated and then this area hold. Then I would think we can get some sustained upside across here for altcoins. Until then, I think they're in pretty tricky territory as well, as we see obviously with the total charts and that as well. You know, that was a key level here. We lost that quite convincingly. So a lot of work to do for altcoins. Now we are going to get those outliers as well. Actually, I'll cover ADS at the end of this as well, because that's holding the level we've discussing for quite a while, which is really, really good to see, because just a massive project in terms of potential and the industry it's trying to disrupt. So anyway, let me get back on track here, and we're going to go to Ethereum first. Take a look at our ETH chart over here. So on a weekly scale, which is where you're going to see a lot of these other lines come up from. Not as interested in this. What can we see? Well, there's a lot of inefficiencies in this move down, right? And an area that's definitely of interest to me here is this. Let me tell you as for why. That's the origin of the move, led to this humongous pump higher, all right? So as we look at the charts here, this consolidation led to this massive rip, yeah? It's the same reason that, you know, I was adding more ETH around these levels, you know, always honest with you guys, like I say, added here, added more here. But look what happens when you start to lose these levels, yeah? And this is just basically, I take it on a bullish consolidation, which are bearish candles, can be a little bit thing to get your head around. You're very welcome, by the way, Anthony. And hey, Horace, how you doing, buddy? From the flat top down to the low of the wick here, unless it's a ridiculous wick, in which case I'll just favor the bodies, or you can just take the whole consolidation area. Looking at this across wick in, always support through here that eventually led to price pumping up. So it considered this area, you know, real value. Then we got that pump here, and then we got, look, the wick recovery, we got the wick recovery here. As soon as we close below this here, then we start to look lower, all right? Looking for these key consolidation areas. This is much more from kind of like a spot standpoint. So, you know, a kind of buy and hold approach. I'd need to see probably these levels here recovered on ETH before I'd look to kind of trade this any higher. So that's where we're on. Let's go. We get a bit more clarity coming in here on a daily scale. We'll probably start to clean this chart up soon, leaving everything on there so you guys can just see, you know, week to week what we're discussing, and so it holds us accountable for the analysis that we're doing, right? So as we look at this, these equal highs were the key area for us. Price closed above, looked promising to begin with, was then looking for it to draw down into this bullish gap, as the arrow shows here. Ooh. Yeah, price to draw down into this bullish gap and push high, close through it. Yeah, so remember, that means it becomes an inversion gap. We look for this to get retested. Where was the next liquidity? It was this low, this order block as well here. Wasn't putting too much faith in this order block here, because we'd already tapped into it once. If an order block is set after we sweep liquidity, then it becomes a more high probability order block for me. So an area that I'm interested in here, for example, is this. All right, and I'll tell you as for why, because we don't need that on there now. Actually, we can clean that up, because when price closed below this area here, look what happened. Equal highs here, price swept liquidity. Yeah, and then we look for this order block to hold. When price closes below it, this area then becomes a breaker. Okay, you see them very rarely in my chart, you see them in orange. And so we would expect this area to offer fairly strong resistance, especially if we leave these equal lows below. Then we'd look for price to kind of be pumping up to this area, potentially finding resistance in here. And what I would want to see is one of two things. Price coming into this area, having a corrective move lower, which is absolutely fine, finding some form of bullish gap in this move, right? In which case I would say we've seen an initial rejection. Now I know it's pretty safe to trade it, at least to the area that it's balanced, okay? But certainly higher, because what I would be saying is if this is really causing the rejection, there's no reason for price to get back to this level. We would then look, if that was the case, we would look for something like this, where price comes into this area, potentially finding resistance in here. And what I would want to see is one of two things. Price coming into this area, having a corrective move lower, which is absolutely fine, finding some form of bullish gap in this move, right? In which case I would say we've seen an initial rejection. Now I know it's pretty safe to trade it, at least to the area that it's balanced, okay? But certainly higher, because what I would be saying is if this is really causing the rejection, there's no reason for price to get back to this level. We would then look, if that was the case, we would look for something like this, which is where we failed to get the close above. Price comes on, sees a rejection here, yeah, and then comes back down. Let me move that a bit higher, actually. Yeah, so finds a rejection in this level. If we do have a gap here, we see a close below, then we get the inversion. Then we're pretty certain at that point the price is coming back down for this low. We do have this inversion gap here as well, right? So again, bearish gap, price closed above, yeah, yesterday. So we look for this area to hold as support. So what we can see is we've got a little bit of a way to go really before we're looking at any kind of bullish resurgence. But we are seeing some early stage signs. We need to be careful here because we're drawing up into a large bearish gap. We can see an initial rejection from here, but ultimately, as we spoke about above, what we could be seeing here is an initial rejection here for price to find support in this area, set a, yeah, because we've come off of a low, a high. This could be the higher low that allows price to then set a higher high on the break of this. So at the moment, very patient. Actually, here on ETH on a daily scale, I'm really kind of happy to, to continue to look up with intraday targets sitting around the prior day's high, which is 1926 area. If we close below this, then looking for these equal lows to be taken out, as well as this low here. Let's just take a quick look on the 4 hour. So 4 hour, we've seen the initial and early stages of the rejection from this higher time frame gap again. We got the bearish inversion here. It was a bullish gap that's closed below. So now we're looking for this area to offer resistance, as well as this bearish gap that's also been created here. I'll just do this in red so it stands out for you guys, all right? So while they're in play, price has got pretty strong resistance here. However, we are in an uptrend here, right? Price has set higher high, low, another higher high, obviously looking to protect this low here, certainly this low, make this the higher low, and then push up. Again, if we see any sustained bearish pressure from here, we have liquidity resting below this low, this low, this low, all the way down here. So again, we're kind of ranging between these two higher time frame areas, the bearish gap above and the inversion gap below, which is offering support, all right? So as we look at that, intraday plays for me is still massively favorable. I mean, they normally are anyway, but especially in these conditions, we just want to be very, very careful. I think after Trump's first announcement, I think we're probably going to see a bit of a catalyst in the market today, but it doesn't mean that that's the direction the market is going to settle. But I do expect a lot of volatility later. So with ETH, if you're a low time frame trader, probably paying a little bit more attention here to the 4 hours, so you can get your positioning on the 15-minute, 10-minute, etc., and then execute on low time frames. If you're somebody looking to swing this, then yes, I think this is starting to look good, but I definitely wouldn't take my eye off the daily here. The fact that we're, really kind of ramping up into here. All right. Anthony, good question. Let's say you bought a coin with some good leverage on a chain, you bought it, you let it go, and a big bull run goes and goes. Is it okay to let it stay on the chain? So you mean the exchange, yeah? So yeah, actually Gigi has a good answer down here as well. So it depends what you exchange are with, but you're going to get charged a carryover fee. That's what they would call it in traditional markets, but you basically have a funding rate in crypto. So if you're opening with leverage, then you're doing so, obviously derivatives and futures. So what you will do is you will get charged a funding rate fee, which actually renews several times a day on most exchanges. So you need to be aware of that. That will continue to compile as you trade higher. Now, that becomes more penile the lower time frame you are on because of the percentages that you're dealing with. I believe you're over with us at the Nest at the moment, and we do have some really good information on risk management, position sizing as well. So come and reach out to us over there and we'll put you in touch with some resources. And thank you, Gigi, for your answer as well. Very, very thorough. And they are normally small fees, but remember, you're getting charged a fee to open and close the position as well. You'll pay more for a market order than you will for a limit order because being, the maker or the taker from the liquidity standpoint. Again, we've got loads of good material that covers this, mate, so reach out and I'll make sure to hook you up with all the videos and the course material. So with ETH, again, the daily sets the tone for me here. Where am I going to start to get bullish on ETH above this gap? I want to see this inverted. I want to see price driving higher. Ultimately, while we're down here, look on a daily scale, there's just too much overhead to really be taking longs. I would consider longs from within this area, right? Remembering this on the 4 hour. Here we go. Yeah, so holding this area here, maybe kind of, if we set this candle here 29 minutes ago, I think then we sweep out this low and we start to see some recovery on, say, the 15-minute, that can be a good trade to take, right? Because we've got the structure behind it. Perfect. Okay, so let's rip through some more. Actually doing quite well for time today. No problem, Anty. Always welcome to ask questions on this show, my friend. Right, so Solana. Just leave these mad squiggles on the charts. Does make me laugh every time I see them. Let's pop out to the weekly just to show you some more context. Easier to see here. Key point of resistance, flip to support, has held price all the way through multiple weekly engagements and has led to a decent reaction pretty much every time. More so this one here that was just an absolute beast of a run. Okay, now again, was looking for this area to hold. What did we do? Close below it. Unfortunately, we didn't get the opportunity to really take any plays within here because the close was so aggressive. It came straight down into our next area of liquidity. Although intraday, we did look at some chase trades into this low, but it just didn't line up very well, unfortunately. We had early moves across Asia. Now, as I look at this here, I know this looks a little bit messy, guys, but do please bear with me. We've taken out this high here. Yeah, so we've taken out the prior 2 weeks highs, and we had that strong reaction back inside the range. That to me then means that we're looking to attack the liquidity below the range low. So if we look at this as being the range low, these two lows here, why these two lows? Because the close of this candle left a failure swing, meaning it failed to take the previous swing or the previous low. So there's liquidity resting there and resting there, stacking up beautifully. So to see a purge of this level before any continuation, or again, what we're really looking for is a purge of this level down here, right? You know, for price to come down, take liquidity below these equal lows, and then we see this kind of recovery. I don't know long-term how the markets are going to process this information from Trump, because we just don't know. We're going to have to take everything on board with it. But let's say, for example, we get the best case scenario. Yeah. Now, the best case scenario in my mind is that the markets are being driven lower by the rhetoric and the narrative from Trump and his team and what's coming out of the US in order to get the bond markets down, right? Because they need to refinance their debt. That makes a lot of sense to me. When the money printers come on and they get the central bank to print money in order to buy their debt back, which is their own, buy their treasuries back, their bonds, which is their own debt, they want to do so at the lowest yield possible. Right? At the moment, or until recently, on a 10-year note, that's the treasuries, right? So you're buying government debt, it was paying you out at 4.8% yield. That's 4.8% interest yearly that you hold those bonds, right? Now, that means that when the US is selling those bonds to finance their debt, they have to pay the people that buy the bonds 4.8% interest, which is too high, right? They want that to be as low as possible. The moment they got it down to around about 4.2, and we're using the 10-year note here as our proxy, but they're driving it down to about 4.2 at the moment. I think they really want to see that in the high threes, right? Ideally the mid threes if they can, and they also want to see a lower dollar. While those conditions continue, it's going to be very difficult for risk to catch a bid. However, let's say they get it down to a point that they want to start refinancing, then they start printing money, quantitative easing starts to come into the market. As long as inflation doesn't spike too much and they find it sustainable, they can move forward looking to improve their GDP. However, what it typically does in QE is put a spike into risk markets. Just take a look at what's happening over in China with the fiscal stimulus that they've put in there. Look at the moment what's happening at Germany. Take a look at things at the DAX, the German 40. You know, both of those countries are undergoing a form of fiscal stimulus at the moment, meaning that they're printing money, which then puts more money in people's pockets. People are more willing to speculate. So the theory is that money then washes into risk markets because people are happier to be risky with their money. Obviously, the opposite is true when we're under current conditions, which are known as quantitative tightening or QT, when the whole point is inflation's high, so interest rates go up, cost of living increases greatly, so it puts the squeeze on people and they don't have the same disposable income. Risk markets don't pay out as greatly because they're looking for safer havens for their money. Bonds normally do very well, as do certain currencies and gold, for example. So, ideal scenario, we see the US getting to the point that they want to refinance some of that debt. The money printers come on, it pumps into risk markets. Beta risk markets like crypto will typically start to run hot when we see that coming through into the S&P 500, the NASDAQ, for example. And then what we want to see a pretty flat risk off, moving into a risk on environment. And then I think we see a big, aggressive, and potentially quite short-lived resurgence in a lot of these altcoins. If we don't get those conditions and those things don't happen, then I will retain my bearish bias here until we get some kind of economic background, economic data to back up the risk bid. So what are we looking for here anyway? So we saw this, we got the rejection here, we put down to this level. We're now at our key level of support. So on the daily basis, we were looking for this to hold. What happened? Price closed through. What do we expect? Price to come and take out the next liquidity, which is this low. And it was also this low here, first of all. Again, came in, closed below this low, so we expect it to go lower. And actually, you can see here, right, from Sunday all the way through to today, market's been pretty flat. So even had this pump here, couldn't even get to this gap above it, right, which is ultimately our first target for any kind of pump. Now, I actually expected price to come down and take out this low, especially when we close back here. Looking for pullbacks, we had this beautiful gap in here, right? Slither of a gap, price react, short this in, you know, expectations where we take out this low as key liquidity, but price is kind of stuck here at the moment. So while we're kind of in between this, because we're not delivering from this gap, nor are we delivering from any kind of sweep, this gap is very small. However, it is capping the market. Let me just do it in red so it stands out. So I want to see price either close above this and then look to make an attempt on this high, first of all, on an intraday basis, and then into the equilibrium of this gap. If price continues to hold below this, then the original assumption that we come down to take out this low remains in play. So while we're below this, still looking lower for this low to be taken out, despite the recent resurgence. The fact Solana couldn't invert this gap yesterday with all the bullish injection that came into the crypto markets makes me think that this still is a little bit weak. All right. Now, on a 4-hour scale, look at these candles. Just look at this. It's very, very interesting. You very rarely see these patterns. Look at the long upside and downside wicks every way, basically caught in this range. If you looked at this as a range, you know, just a very rough one, if we did it like that, and then let's say do it in blue, look what we get. Yeah, price wicking down below all of these. It is just ping-ponging in between this. Deviation here, trapping people, squeeze back inside the range, sells off to the range lows. So we need to see a confirmed breakout of this. All right, so for example, on this kind of level, you would want to see like this move, price break and close out, get a good retest, and then upon the break of this high is when I would look to get involved, right? That's key for me because that high would be akin to this high here. And what we never got here when this high was set was the follow through and the retest of this area to show strength for price to go higher, right? So that's the safest route for me here. So that's what I'm looking for on Solana. Like I said, until then, I hold a bearish bias, but I'm very cautious because, you know, there's a lot of liquidity to the downside here, especially in these equal lows, and a lot of stacked liquidity. So for a move higher, what I'd really like to see, first of all, is price actually purge out this, yeah, and then have a move similar to this. Big purge, quick recovery back above the range would give me the indication that liquidity had been taken from the lows, and we could be looking at an early stage resurgence over here. Let's take a look at Beam. Okay, interesting one here with Beam. Actually, there's a really clear and obvious low that's kind of capping the downside at the moment, so we get that in. So that's an interesting level. When you see an area like this that has held a number of times, especially on a weekly basis, if you start seeing weekly closes coming below here, you know, it doesn't always work out. Of course it doesn't. It's trading, right? But I would then expect price to be looking for liquidity below these lows before it can then make that pump higher. Not really a lot more that it's telling me here, other than the fact this weekly order block is doing a great job of suppressing price as well. Yeah, we've kind of driven up into this. We've had no closes in and around the 50%. So as we move down to a daily now, Jesus, those upside wicks. So as we move on to a daily now, we can see a little bit like Ethereum, right? You had this consolidation in here. well, this is some kind of like weird hedgehog type pattern or something, but came into this level, and then this level has held particularly well. Again, just favoring downside here until we can start to see some reason to not do so, right? So for example, this bearish gap, if we close above this here, right, then I would say, okay, price can probably start making a move towards these highs or this high over here. At the moment, the bearish gaps are doing a good job of suppressing price, right? So close above this, again, probably going to end up sounding like a little bit of a broken record on this one, right? But I think that's it. Can you do a longer term projection, 3 to 6 months? Yeah, sure. If you want to do the 3-month chart, probably going to be hard on some of these assets because there's not really going to be tons and tons of data. On some of them there will. If I'm looking at like a quarterly chart, for example, what's really important for me is how the candles are engaging with one another, right? We're basically in a gigantic inside bar range, which has been set by this large candle here, forming the low and the high, and then the inside bar, which is this candle here. So the low of this candle is of great interest, and we can see that's where price rejected. I'm then looking on here to say, okay, well, whereas what's capping the market here? And again, we can see it's this low. So immediately on a quarterly scale, I've got a nice range for price now. And I can also see quite clearly that price is kind of being suppressed by this gap here. So I'm somebody that likes to see some form of liquidity being taken, right? So to see a flush out of these lows and price to close back inside the range, like we saw here, yeah, price took out these lows, took out this low, and this low. Then it climbed back above them all. So we then say, okay, price is probably looking to move higher here. All right. In the same way that when you see key rejections at highs and lows as well. Look at this, for example. Yeah. So price climbed back in here. So you get an expectation that price is going to move higher. Now it did that, right? But keen-eyed amongst you will notice that this would have been our cap point for progress. Yeah, really doesn't like that at the moment, does it, Trading View? Yeah, up close candles, close below, bearish order block. What happens? Nice reaction here on the close of that. So we look for price to move higher into this. You'd want to see a close in and around where price actually wicked here, right? Then ultimately, that's why you have your invalidations, and you would say, okay, I'm bullish here on the lower time frames, price then closes below. Then all you're looking for here is for these levels to be retested and then to continue with price selling off as it continues to close below, yeah, the up close candles. So on a 3-month scale, so a quarterly scale with this one, I just want to see price kind of back above this gap really. Then I think we can really start making some moves higher. Is this even to trade? No, I would use it. Well, it depends what your time horizon is, Antonio. Everything's kind of really to trade. But what I would say is that I would use this much more as a proxy and a gauge on what my kind of overall sentiment is. So possibly reclaim of 0.004. Let's have a look. Maybe a bit low, that one, mate. I mean, what I would say here is you probably want to see price as an early stage resurgence here. I'd like to see it flush out a low, but it doesn't have to. If you look at that there, when you're in the ballpark, 0.0468 is the last down close candle. Close above that and look for this area to hold as support. This gap I'm not so concerned about now because we've rebalanced it with this wick. So I would then be looking for this wick up here to be the next, 0.4, exactly, to be the next kind of target. So I think close above there, look for that area to hold, obviously quarterly, and then move higher. Obviously, we need to appreciate crypto markets especially move very quickly, right? So we don't, a quarterly close could be up here somewhere or down here somewhere, but absolutely, yeah, to the highs. But like I say, I would, look for a flush lower to generate some form of liquidity, even if it was just the prior quarterly low, and then for price to move higher. All right. Very welcome, GG. And ARB as well. Yeah, sure. Let me actually get a groove on now and start ripping through some of these. So that's beer. Let's take a look at near. Yeah, I will stop doing the quarterly on that because otherwise I will literally be here all day. So weekly scale, where are we with near? So we took out this low, didn't we? Nice gap low. Price holding there really well, all right, which is what we wanted to see. We've not really got the follow through on that yet. No. Yeah, we've rebalanced this gap though, which is a good sign. Again, on a weekly scale, the real first kind of indication for me that price is looking to move higher here will be if we close above this. Close above this, confirm this as a weekly order block, and then I'm looking to just tag out liquidity up to this gap first of all right? And then at that point, you're looking for a structural shift as well above these highs, and price can then hopefully look to settle into some continuation higher. On a daily scale, we can add another layer of granularity to that. We took out this low. There's been a good initial reaction here. We've seen the first stage of recovery yesterday in setting the daily order block. And again, I like this order block if it holds. Why? Because we've swept liquidity from this low. Yeah, we've reclaimed this area. And now I'm looking up towards this gap above us, as well as these highs. So as long as this area holds, if we close in more than about 50% kind of in and around where the low of this wick is, I expect this low to be taken out. And then ultimately, you know, a move down to this low if we really kind of get that momentum play as well. In terms of looking for this to recover, yeah, really simple play here on the 4 hour. I will be watching for this bearish gap. If we close above this bearish gap, look for it to be retested, and then we push up from there. Okay, SEI. We're in a big gap with this one. Yeah, okay, big weekly gap with this one. Decent reaction here. Closely watching this low, because we want to see a sweep of that. If price comes and closes back above that this week, I think we could move higher. We'd also confirm this bearish gap above, which can be the draw on liquidity. You can see that kind of baked into the larger bearish gaps, the consecutive ones here and here. Yeah, I mean, again, you'd want to see this daily close here and start seeing price close above these candles. At the moment, there's a lot of momentum to the downside, but taking liquidity below this low, we could expect a little bit of a bounce here, maybe up to this first or second gap, before ultimately continuation lower, because we are in a bearish downtrend, right? But the early stages of price moving higher, I'd want to see price close above that. There's no point moving to the 4 hour here because the daily would take precedent, but certainly from my respect. So I'd want to see price close above 0.17620. Let's take a look what we've been hacking about with on SUI, shall we? So weekly order block, right? Remember, this hadn't been I mean, this was obviously a while ago we were doing, but that was untested at the time. Price drove into this, making us think that we're probably going to be moving a little bit lower, maybe as far as this, but we couldn't tell that until we got close below the 50%, which we didn't. We got this doji close, and then we got this move higher, which was really tricky because it reacted at this bearish gap, which continues to cap the market. Right, so we had no choice but to remain bearish here, especially in this first interaction. This then really looked like it was going to be a strong resurgence. Again, came back down below, so it was looking for lower prices. Whenever we're doing that on a higher time frame, the first area we look at, so say for example, you know, that long downside wick, so we expect this week to trade lower. Doesn't mean we expect it to go all the way down to this next swing low. The first target is always looking at the prior weekly low or the prior daily low, if that's what you're if you're trading on those time frames. And at the moment, this looks like quite a nice recovery. We've got 4 days, right? Obviously, and this is being buoyed quite heavily by yesterday's, or, you know, the bullishness that we've seen from the beginning of the week. Here on a daily scale, we can see we swept out these lows. Again, referencing these lows down here. We've had that initial recovery here, right? Yeah, so where that weekly order block line is, where this down close candle is as well. So on a daily scale, like we've seen with other crypto, we've had that resurgence. This long wick has rebalanced this very skinny gap here. So I would then look for this gap above to be what's drawing price higher. Yeah, so I would hold a relatively weak bullish bias on this time frame heading in, being aware of the weekly, but obviously we have a long time for that to play out. If we close below the low of this candle, which was, let's take a look what the opening price was here, which is 2.2672. So close below that, then I'm looking for these lows to be taken out here on SUI. Take a look at render. So not much to write home about. We were talking about needing to close above this on a weekly scale. Actually, we have set this very small doji one here, which will be a little bit less reliable, but a close above that would at least give us some potential impetus to move higher. We also have this bullish gap that's just below us, not the purple one. There's this one here that's doing a pretty solid job of supporting price. So the catalysts are there for this to move up if we get that close above. So that's what we'll be watching on a weekly scale. From a weekly point of view, from a daily point of view, excuse me, we've had that resurgence up. Look, we're still holding structure here. Higher, 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 low, higher, 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 low. I need to see a close here below the low of this candle, which is 3.2901, strong body close, again to target this cluster of lows. Very, very similar to what we were talking about before. Again, when we got the close above this area here and this order block, that's what made us bullish. We took some longs into this area up here. Expectation was for price to continue up to here. When you start to see the wick rejection here and the pin bar candle looking for this gap to hold, which it did not. So now price is relatively neutral for me here. So I will move to a 4 hour to try and find a little bit more context. All right. And here on the 4 hour, this gap is everything to me. This is the key area. That's the battleground, right? So if price is going to have a resurgence here, then I need to see it back above this. If not, I expect rejection here and for price to seek liquidity lower down. We took a look at ETH-BTC as well, didn't we? And then our friend asked us for ARB. Let's have a look. ARB USD. Why have I not got a... Take a look with our friends over at Bybit, shall we? So what have we got here at the moment? Weekly lows quite a long way off. There's a weekly gap here that's suppressing price. Not really much right home about there, other than that, the fact that we've seen the rejection here makes me feel like this is a realistic target at 0.2948 on the daily scale. Yeah, there's just not really a lot in here to stop price. So the best case scenario would be that we sweep this low and recover. This would also be, if we look at this here, in and around our golden pocket, 705 and 79 level. So if we're looking for this as an area to hold, hopefully we can see this push up. Ultimately, though, while we've got liquidity below, if we don't take that liquidity out today, which, you know, if we get bullish news, that is, you know, the announcement from Trump is taken really bullishly, etc., then we could see this quickly sweat and then a real big rip. But, you know, if we don't see that happen, any closes below, this makes that a daily order block. I would then look to intraday trade down to here. I would then look for this level to be flipped, meaning close below, and then retest of this area would very much be for shorting lower. Okay, that's definitely how I'd be looking at ARB at the moment. If that candle sets like that today, then the next play for me is looking for price to close back above this. And that is at 0.3339, all right, to get a close above that. But ultimately close below this, and, you know, we're looking for this to move lower. I'm going to finish up on ADS with you all, right? So, you know, I'm a huge fan of this project, the company Alchemy. I've been very open about the areas that I've been buying this. Again, none of this is financial advice. Do your own research, make sure you understand these projects. Before I became a full-time trader, I actually used to build and sell companies, and one of those was a digital marketing agency, which is still going very strong today, I'm happy to say. So I know a little bit about the digital marketing space and the marketing space in general, and I know a good project when I see it, and I know an impressive team when I see it, and these guys have both in spades. They also have massive, massive contracts already with huge players like Coca-Cola. I think the digital marketing industry is one that's ripe for disruption, and I think they're really, really well placed to do it. So all I'm looking at is I'm saying this has always proved a good buy. This consolidation here hasn't been broken. This was an amazing buy here. I think this is going to be the same here. So as a long-term project for me, this is where I'm looking to hold, where I'm looking to add. And I'm just happy to just keep buying on these dips, right? Like we said here, you see this dip down, take out some liquidity, prices driving down into this area now. So what we want to start to see here is we want to see price start to reclaim, yeah? So getting this drive down, oh, actually, let me do that differently. You know, getting this drive down, looking at this level here, right? This is the level that was support last, right? Then there's been resistance through this whole area. So I want to see price back above here. And then I think we can really be in for a tear again, as long as market conditions are favourable. All right, guys. So remember, Trump is speaking today. We need to cover the facts today. And let me just refresh that, see if we've got any more information. Oh, okay. 8 p.m. UTC. Really, really interesting, making that 9 p.m. tonight. So the markets have a little bit of a clear run at that. Obviously, we need to factor in the ADP non-farm employment change, which is coming up at, I believe, looking at that now, in about 20 minutes' time. So if you are with us over at the Bird Nest, I'm going to be firing up the trading desk momentarily. All right, we're going to go live at exactly that time to see what the print is, watch how the early market reaction is, volume and volatility, and then we will look to take some intraday plays, if any, present themselves across the markets. Aside from that, just want to wish you all a fantastic week ahead. Let's, and same to you, Seb. Let's hope we all survive Liberation Day or Liquidation Day. Exactly. Let's hope it really is that. Let's hope it's liberating for the markets, right? If it's not, don't worry. Come along. Come and join us, come and get some information, whether you're in free, whether you come and join us as a paid member, whatever, you can find information down in the description. We trade the markets both ways, with almost a 70% win rate in the last month, 17 of the last 18 months profitable. All of our trades, all of our P&L, everything that's taken is completely transparent and available for members. So come along and give it a try. And also, look, if the market conditions don't turn around immediately, don't get disheartened. Make sure you're investing that time in yourself. Don't just sit there and look at your portfolios that are going down. Don't just sit there and look at the negative sides and look at all the poison that's coming out on Twitter. Find value, find good education, find good educators. Get yourself in a position you either understand how to trade these markets both ways, or you're in a position where you're building aggressively in these conditions. That's what the best companies, what the best builders, what the best devs are doing, right? So that when the time is ready, you are prepped and good to go. All right, legends, have a fantastic day. I look forward to seeing you all around the nest, and I'll be back with you live next Monday. Take care.